Okay, this is going to be a video over the 23rd. So on the open, we had a gap up, and let me do the overall picture first and better structure these. So overall, we had a sell-off, fairly deep pullback to around 50%, and then trend resumption down. And when you get a rally like this, the odds are you're going to form a trading range. However, you have to be leery when you start getting a channel that's as tight as this, and you're just getting bear bars. It's a micro channel, and then we rallied, and when we went sideways, we tried to form a bottom, and then we got the bear breakout and sold off. So you got to be leery, a little leery with that. So on the open, and I'll do always in first. So let me just talk about the bars first. Try to keep this more structured. First bar of the day, it's top of a trading range, not a good buy. Probably sellers above. 20% chance it's the low of the day. Almost outside up on bar 2. It's trading range open, gap up, probably going to test down and get to the moving average, close this gap. I don't think a lot of bulls are going to be all that eager to buy up here. So now you have kind of an IOI inside bar followed by an outside bar on the doji, then an inside bar. You can call it a second entry short. Some bears, they may sell below it taking a chance. Others will say tight trading range. I'll just wait for the breakout. Another inside bar, but bull bar. Big bear bar, so probably always in short. We're at the moving average, so support. Some traders will sell the close. Others will be a little nervous and they'll want to wait for follow through. It's possible we get a big bull bar, and then would be kind of a wedge. 1, 2, 3. So if you are selling and you get a big bull bar closing up here, you probably have to get out. And we got a doji, so bears may just sell the close. While it's not great follow through, it's a disappointing stop entry buy for the bulls. Therefore, bears they'll look to sell. So now we have 3 pushes down. 1, 2, 3. It's a weak breakout below here. Close around 50% pullback. Do some traders? Traders are scalping. They are doing that. However, it's possible, and this is what happened here, when it's a weak stop entry buy as well. So with this kind of gets into the subject of front running moves. A lot of times people will anticipate, so I think the market's going to bounce, therefore I'm short, I'm disappointed, rather than getting out on a bull bar and maybe up here. If I sold this close, maybe I don't want to take a loss. So rather than getting out up here, if we get a bull bar on the next bar, I'll just buy back my short now. Well, the risk with that is you get a big bear bar closing on it's low, and you're thinking, darn, I shouldn't have done that. Well, the same thing can happen with stop entry. So let me make up an example here. Like over here. You think, oh, it's second entry short. I'm going to sell this close with my stop up here, and then bam, you get stopped out. When you front run, you can save a few points. However, there's a cost to that, and that's you'll get stopped out sometimes when moves don't trigger. And if you wait for stop entries, it'll keep you out of bad trades sometimes. So anyways, bear bar follow through. Bulls, bears, maybe they get out a point above this bar. Bull bar, so it's a wedge. You can call it a micro channel, really from the open. Probably sellers above. Some bears, I think, would get out above this bar just because of the trading range price action. Didn't trigger, going lower and lower. What about here? Same thing. Very tight channel, so it's a breakout on a higher time frame. However, you're getting bad follow through. Traders may expect a bounce. So some will get out above a bull bar. It's sell to close. And you kind of have 2 choices. You can use the really wide stop and bet on the first reversal failing and a second leg down, Or you can manage the trade more and you can get out above a bull bar and look to sell again or buy if it keeps going up. But it's more management. Low win short, but again, bad follow through down here. Looks like a vacuum test of support here. You can call it a higher low major trend reversal. Tight channel. We broke below this low. If it's a trading range, bulls are going to look to buy. However, they probably don't want to buy here. They want to buy some sort of failed breakout second entry buy. So let's see if we get one. And we're not getting it. So, again, kind of like what I said about the flow chart in the prior video. If I want to buy in a trading range, I want to buy second entry buys, especially after strong moves. So strong move down, we're at support. I don't want to buy here. I want to wait for a reversal attempt and wait for the retest and then see what happens. It's the same concept as a major trend reversal, just on a smaller time frame. And the bulls, they're not doing enough. We're going lower. So what about here? Do I want to buy here? Yeah, I could, but it's a doji, tight channel. It's not a great buy. Where is the strength for the bulls? Why have the bulls only been able to go above one bar? I want to see the bulls go above 2 bars. I want to see, look at the bears here. They're dominating the market. And one of the issues, it's important to think through, how are the bulls really making money here? If I buy the close and scale in, I'm probably losing money. Even if I bought this low, price went 1 or 2 ticks back above it. I'm not making money here if I'm a bull. And now it is consecutive sell climaxes. So again, I don't think bears are going to be super eager to be selling in here. But again, we're probably going to go sideways more. And with that said, though, you will have bulls start to say, okay, possible final flag, maybe a triangle, final flag down, possible final flag here, II, final flag, maybe reversing up, so starting to go sideways. And maybe you have a second entry short here. Maybe it's a wedge, 1, 2, 3. 3 pushes up, 1, 2, and 3. And we have a low 2 short. Often what happens at the start of a move is it traps traders. So here, obvious trading range. Looks like a leg in a trading range, broke below these lows. We're testing down here. And we have a second entry short. So you can call it a wedge. I would just call it a second entry, doesn't really matter. We had a low 1 here, low 2 here. You can consider this the low 1, but we went to a new low here, so maybe this is the pullback, and here's the second pullback. And in general, 40% of the chance, at least, this will be successful. However, often, what happens is this traps bulls and bears. So if you're long down here, maybe you bought above this bar, there's not a great stop entry, but let's pretend you are long. What do you do when you see this? You're thinking, dang, it's consecutive sell climaxes. Here's an obvious bull bar. I'm certain we're going to get back there. However, I'm not sure of the path. And if that's the case, then I got to get out below this bar. So again, the bulls, they get trapped. We went outside up and starting to go higher. And you can see, looks like bad follow through. And again, tight channel. So one of the things I want to point out, for one, I know I'm zoomed out on this chart. I'm not going to pay that much attention over here. I'm more interested in what's most recent. So I'm more interested in, we had a strong sell-off, and the odds are it's going to have to form a trading range. This is the first reversal up. So I think it's very important to, if you have to do this, take a bar, do this and make it super thick. Just remind yourself that tight channel, it's a breakout. I know there's going to be a retest. Therefore, I want to see what the retest looks like. If I'm long, we've had, a couple pushes up. I'm probably getting out below this bar, and I want to see what happens. And This didn't trigger. Breakout follow through, but again, probably getting close to 50% consecutive buy climaxes. Bears are probably going to give up soon, which they did here. And, maybe bulls get out, bears get in. Aggressive bears betting on the retest. And you can see, what do you notice here? Well, when you have a reversal of a move, traders want to see what the retest looks like. I mean, just put yourself in the shoes of the bears. I'm short, and theoretically my stop's up here. Okay? I'm going to hold through the pullback, and regardless of if I add on more, am I really that eager to buy back shorts? I'm thinking, am I saying, darn, I'm so disappointed by this rally that I'm going to buy back shorts? Maybe, but I don't know. And then you get this big bear bar. And then you're thinking, well, maybe this is going to be a breakout below a trading range. And bad follow through, but very tight channel. First reversal up is probably going to fail. You'll have bears that'll say, yeah, it's a wedge bottom, and maybe it's a triangle, and maybe we'll reverse up to here. However, first reversal up is going to fail. Therefore, I don't want to be the first person to buy. And doesn't trigger, keeps going lower. 3 consecutive bear bars, probably going a little bit lower. And then we get a big bull bar. And, as strong as that bull bar is, compared to this, it's not as strong as the sell-off. Therefore, may get a few legs up and sell off. 3 consecutive bull bars, tight channel, just like we had a strong rally here. This could just be a 50% pullback and a retest, which it was. So now we're starting to go sideways more, and let me just get rid of all this. And the one thing I would be, I'll try and, I'm trying to give my thoughts, and it's really difficult to explain. I know it seems like I'm all over the place. It's difficult to put thoughts out into words, and it's faster for me to think this in my head, so it's hard to kind of go from mentally and express it to you guys. But what I'm trying to get at, the 10,000 foot overview, is things don't usually reverse that quickly, and the bulls tried several times here. They finally got a reversal up, and even though this looks like it's always in long, you don't know how many people are looking to sell a 50% pullback. And this can quickly just be a vacuum test of here, maybe the start of a channel, and then the bears are gonna hope for a trading range. And if they see this as a trading range, they want a bear break out of this trading range. And they want a high, and they want a lower high here, and then they want a sell-off, and then they want this sell-off to stop somewhere at this channel. But just like over here, tight channel, the bulls see reversal, the bears see reversal, and the bears are, well, for one, traders are deciding if they're going to get a major trend reversal. So, buying here, it's not good. It's around 50% of this range, or the middle of the range. Not a good buy. Buying here, same problem. Big bull bar, big risk in the middle of a tight trading range. Not a good buy. But it's okay. It's not great though. And your big tail on top. Now, the bears, they're trying to get the downside breakout. The bears really had a chance here. It triggered the buy, went below here, and I think this is the turning point for the bears. The bulls really should have gotten a strong bull bar here. If they're really going to be strong, they should have. We broke below this low. We defended the stops here. You have to ask, why couldn't the bulls reverse up and close on their high? And for one, I think, and Al talks about this, I think the bears purposely allowed this bar to get this big. And the reason for that is it makes the math bad. If you have, hypothetically, let's say you're going to buy this low. You're going to buy this low. You're going to buy somewhere on a limit order, and you bought during this bar, and it's a big bear bar. So you're buying, you went long, and now the bar is reversing up. And let's say you have 4 points of open profit, and you're thinking you may be willing to hold and say, well, gee, maybe we'll get a good stop entry. But then the bar gets bigger and bigger, and you're saying, gee, this is becoming a big bar, and I have 10 points open profit. I want to take my profit. And then that causes everybody to start scalping out and makes the bar weak when it closes. And as soon as it closed weak, the bears, they immediately sold the close. So a little bit of a surprise bar. Odds are you're going to get a little bit of a second leg down probably. Follow through, so increase the odds of a second leg down, but it's also a channel like this. So we're at the bottom of the channel. Tight trading range, you can call it a final flag. We're probably going to get back in this area. 3 consecutive bear bars, so good for the bears. But again, just like the bulls made money buying these lows, they're going to make money buying here. And there's our second leg down. So a lot of bears will probably take profits on this bar. The odds favored a second leg. They got the second leg, and we're reversing up. Bad stop entry for the bulls, which is common in a bear channel, and you're probably going to retest the moving average. Now we have a stop entry here, so it's also a micro channel. Do you really want to, do bulls buy here? They can. I mean, it's looking like consecutive sell climaxes. But the one thing working against them is it's a very tight channel, and it's a micro channel up from this point. So a lot of bulls, they'll probably buy here. I think they'd realistically buy more lower. I don't think this is a, if you're looking for those 1 to 3 trades a day, this is not one of those 1 to 3 trades a day. And for that reason, now you could buy here, but again, it's still a tight channel. And what's your goal? Are you buying because you think you're going to form a bull trend, or you're buying because you think there's going to be a retracement back to average, such as the moving average here? And bulls scalped out, bear sold it. So overall, it's easy to talk about the market at the end of the day and explain everything going on. And if we really wanted to take, and I forgot to do always in, I'll do it in a second. If we want to talk about every conceivable thing going on, it would take hours, and we wouldn't be able to do it. That's why you have to have some sort of structured plan, thought process, setups, something you look for, and you have to have defaults, because there's so much information to process that you don't have the time or the mental capability to do it real time with too much detail. That, I think it's a very difficult thing to do. Always in, not clear, maybe the bears sell below this bar, sell below here, stop up here, and probably get out above a bull bar here. And I wouldn't go short again. Looks like a leg in a trading range. Bulls, maybe they buy it here, but tough call. Or, maybe they buy the follow through here, stop down here, and probably just get out 2 or 3 or 4 points below any bull bar here, certainly below this bear bar. Aggressive bears, they can sell here. Maybe they sell this close. If they want higher probability, stop up here. They might get out above that bar, but it didn't trigger. Definitely get out above this bar. And, hard to sell here. Maybe, do you sell there? Maybe. Otherwise, you're kind of forced to sell pretty low in the bottom of the channel, which I think is hard to do in general. And, maybe you sell here, but really just not that easy. And traders probably get out above this bar or above this bar, and that's the close. One of the problems with channels and small pullback trends, which is kind of what this is that the signal bars are not great. And the reason for that is you have bears that are selling, computers are selling more pullbacks, percentages. So, okay, if I'm a computer, what am I going to sell? I'm going to sell this close. I'm going to sell at the moving average. Really what I'm going to do is I'm going to sell in increments. So, if you think about a fund or an institution, they're not trading one position, they're trading lots of positions. They're selling closes all the way down, then they start scaling out of the position and getting out of the position. They're buying this close, buying more, and maybe that's the opposite. Maybe they're selling this bar, selling more, and buying it back. So, I really think about it from the concept, what's going on, why. And that's another thing Ali Afshari, and again, I apologize for botching his name, really talked about, now does too, is it's important to understand why something's happening. Why are we pulling back? Understand the rationale for why this happens. And if you can understand the rationale behind it, it's easier to understand what to do. If you can understand why do we get a big bear bar here? Well, it's simple. A trading range is a fight over a bull trend and a bear trend. So we have a bear trend and we have a bull trend. So what does everybody want? Well, the bulls, they want to pull back and a breakout to a new high. The bears, they want more down. So lower high, they want another lower high and another lower high and then a give up. The bears wanted this to be a lower high. The bulls wanted this to be the start of the trend and for us to pull back and to keep going up. Just like over here, we had a strong rally. We pulled back. The bulls are hopeful that this is going to be the start of a bull trend. So they're really hopeful that they can draw a channel here, they can project it up to here, and we're going to be in a bull trend. And they tried. Got above the high, but then we sold off again. And then we sold lower. So now the bulls are saying, okay, maybe it's a double bottom major trend reversal. And maybe it's just a more complex higher low. And maybe this is the start of the bull trend. And I'm going to draw a parallel up here. And there you go. And the bulls tried. They're trying. And they got their strong rally, but looks like they're failing. And down here, the bulls are trying to do the same thing they did over here. They're trying to form a rally that starts a bull trend. So I hope this helps.